This technique is mind-blowing. Do you want to spot the next leader after this bear market to ride the huge gain in the next bull cycle? The big gain that I'm talking here is ranging from 100 to 500% or even 1000% gain. Hello everyone, the current bear market is still prevailing, and instead of waiting, we shall start to look for the new leaders in the market to increase our gain as much as we can. For example, do you want to ride the speculative stocks such as ARKK after the COVID-19 crash which gave almost 330% gain? Or after the speculative stock run over, ride on the energy stock such as SLB for 250% gain again? I really hope that I know this technique earlier. This analysis has completely changed how I view the market now. It is a big mindset blow to me. From today, my channel will be more focusing on the leader spotting to take the advantage of the current bear market. While I need to emphasize dollar cost averaging on index tracking ETF such as SPY, QQQ are always right, but this is not applicable to stock. For example, this is the current Dow Jones component since year 2020. If we compare the Dow Jones components 20 years ago, which companies are in the Dow Jones component since 20 years ago? 3M, Caterpillar, Coca-Cola, Home Depot, Honeywell, Johnson & Johnson, Microsoft, McDonald's, Merck, Procter & Gamble, Walmart, Disney. 12 out of the 30 or only 40% left. This shows that investing in an individual company, even with a super fundamental at this period, they may still not perform in the future. Even we manage to invest into one of the 40% of these stocks, if we compare with DIA and SPY, with an average gain of around 200% for 20 years, only 7 stocks, HD, HON, J&J, McDonald's, CAT, Microsoft, and PG beat these two index significantly during the same period. This shows us the importance of choosing a right leaders in stock market. The first step to identify a leader is to understand 4 stages of a stock market. This is purely technical, but if we manage to master this, it would be easier for us to grasp this profitable technique for stocks, options, mutual funds, or even commodities much easier and profitable. The basic fact for this technique is any stock has to be in one of 4 market stages, and the trick is to be able to identify each one. This is the chart to illustrate the 4 stages of a major cycle. Stage 1, Stage 2, Stage 3, Stage 4, and it will be going back to Stage 1. In this video, I will be focusing on Stage 1 and Stage 2 with some of the recent examples. Stage 1 is called the basing area. This stage happens after a stock has been declining for a period of time, and finally, the downside momentum is no longer sustainable. The stock starts to trend sideways, where the buyers and sellers are starting to move into equilibrium. In this stage, we could notice the volume is normally low. To determine the stock stages, 30 weeks moving average is used. In stage 1, the moving average loses its downside slope and starts to flatten out. In a sideways trend, the stock will be moving above and below the moving average. Thus, support and resistance will be formed as well. Sometimes, the best forming can go on for months or even years. You may ask, as stage 1 is forming a base or a potential bottom. Is this a right stage for us to buy stock? The answer is no. The money could be tied out for a long time with little movement. And in fact, time is money. What can make things worse is the investors who are impatient may end up selling after months of fluctuating sideways at a slight gain or loss right before the big move starts. Stage 2, advancing phase. As mentioned previously, in stage 1, a base with a support and resistance will be formed. When the stock finally breaks above the resistance and move above 30 weeks moving average with an impressive volume, the start of the advancing stage 2 begins. This is where the excitement coming from. In stage 2, the stock will move higher and higher and forming a typical uptrend pattern, higher high, higher low. There will be 3 types of buying points. First, the moment breakout happens. Second, the first pullback after the breakout happens. The dip will bring the stock back close to the buying point and move higher again. Third, any dip whenever the stock is still in stage 2. The first buying point will bring bigger profit with a higher risk of false breakout. The second buying point has lesser risk, but it may miss the whole stage 2 if pullback does not occur. For the third, the stock may move into third stage and the risk-reward ratio is no longer attractive. There's no right or wrong, just follow our own risk appetite. When a stock first moves into stage 2, normally it's still surrounded by negative news. When it moves higher and higher after several months of bullish breeze, more and more investors will jump into it. Eventually, the stock will be trading far above its support level, overextended and no longer a buy. Overall, if we miss buying a stock near the advanced stage, don't get panicky and chase the stock for more. Next, by combining stage 1 and stage 2, we will be able to identify the next leaders. First, let us look for some example. As always, start with our favorite ETF, SPY. I will only use one indicator at this moment, weekly moving average 30. I will introduce more indicators to further sharpen our entries and exits in the future videos. If you do not know how to set it out, please refer to my previous video here on the top right corner. Let us first start with dot-com bubbles in year 2000. The chart period is weak. White line is weekly moving average 30. This is a typical example of stage 4 period. Stock saw off, downtrend, forming a pattern of lower high and lower low. Does this look similar to the current market? The two main observations during this period. First, moving average 30. The white line is swooping downward. Second, most of the time, the candles are below moving average 30. Can you spot the stage 1? Yes, it occurred in around year 2003, where the moving average 30 was flattening. In addition, we could also see that a clear support and resistance area were formed. Then, the price crossed above moving average 30 and the price were mostly above moving average 30. Stage 2 occurred and the bull market started, which lasted for 4 years. During this period, the stock moved higher and higher. How about subprime mortgage crisis happened in year 2007 to 2008? Now, I will let you spot the stage 1 and 2 by observing the moving average 30 for 5 seconds. Hopefully, you can spot it. The moving average 30 was flattening here and the price crossed above the moving average 30. Then, the first dip happened and the stock started a new bull cycle again. This part is stage 1. This part is stage 2. If we manage to spot the early stage 2, we could ride this bull for a nice gain. Next, I will illustrate how we can use stage analysis to spot leader. Here, I will be using value stocks versus tech stock after the COVID-19 crash. First, start with QQQ. After COVID-19 crash, the moving average 30 was flattening. Then, after the price moved above moving average 30, bull cycle started on 13th April. QQQ then had a gain of around 50% in December of the same year. How about the value stocks? Let us use Diamond, an ETF that tracks Dow Jones component. During the same period, DIA only had a gain of around 22.75%. In addition, we could see that on 13 April, while QQQ had crossed above moving average 30, DIA still below the MA30, with MA30 was still sloping down. This has signified us a hint that technology stocks will be the potential leaders after the COVID-19 crash. Similarly, if we use ARKK as an example, we could also find that it had crossed above MA30 on 13 April, with moving average 30 started to sloping out. This signifies speculative stocks were the potential leaders after the COVID-19 crash as well. Indeed, ARKK had a gain of almost 150% during the same period. Oil stock. Similarly, if we open crude oil future chart, could you spot the stage 1 and stage 2 here? Stage 1 was during this period, while the early stage 2 was in November 2020, where the moving average 30 started to slope out, and the prices were above MA30 most of the time. Then, the commodity super cycle starts, and the oil price starts going higher and higher, a typical price pattern in stage 2. When I found this truly amazed me. We were already warned that inflation may start to spike out by the chart in the year 2020. After I introduce stage 3 and stage 4 analysis in the next video, then you could find that we can even spot the market sell off due to commodity super cycle. I hope I know this stage analysis earlier. Stage analysis is also very useful to spot the penny stock that has a potential to be a big runner. Let us take NIO as an example. NIO was sold off in year 2019, and the price was stabilizing in the first half of year 2020. Can you spot the stage 1 or the possibly early stage of stage 2? The moving average was flattening at this point, thus this is a stage 1. Then the price crossed above moving average 30 and stay above moving average 30 most of the time. This is a potential early stage of stage 2. Thereafter, the stock ran out for more than 1,000 gain in the stage 2 bull run. I guess I have been giving enough example here. Before I end this video, let us see how the current market looks like. Which stage are we in now? Both SPY and QQQ are showing the similar pattern. Downtrend below moving average 30, and the price is still far below the moving average 30. Thus, I won't buy any stock at this moment until it has formed a base and reached the early stage 2. Is there any stock in the early stage 2? Yes, it is, but I will share it after I complete the stage analysis, stage 3 and 4 in the next video. Please subscribe my channel so you won't miss my stage 3 and stage 4 introduction. Hopefully, you have learned something new here and managed to gain different insight about the market now. Thank you and see you in the next video.